Hey Rent to Retires, it's Adam Schroeder, and today we're going to talk about why is real estate investing worth it. Before I get started with today's video, I want to remind everybody, please subscribe to our YouTube channel, click the notifications bell, don't miss out on this information we're giving you as we try to help you along your real estate journey and make you the best possible investor you can be. Also, at the end of the video, if it's been helpful, don't forget to click the like button so that everybody else knows it's a video that they should spend their time watching and that we know you appreciate it. And as always, if you have any questions or comments or other videos you'd like us to make, leave it in the comments below and we will get to it as soon as possible. So let's get into it. Today I want to talk about why investing in real estate is worth it. And I know most of you are probably thinking, Adam, I understand. But the fact of the matter is, there's a whole lot of you watching who haven't actually taken the plunge and started investing in real estate. So let me tell you kind of what I've seen on a day-to-day basis and the stories that I've heard working with investors. A lot of the investors I talk to are 45, 50, 55 years old and haven't gotten started in real estate investing. They're on square one. Sure, they've put some money into 401ks, some money into the stock market, but they haven't planned for the long-term haul. As they're getting ready to get started on their real estate journey, they realize, and one of the things that's been holding them back is that real estate has a relatively high starting cost. You can start investing in stocks with $100, $50, whatever. You just have to get started and make your first purchase. When it comes to real estate and it comes to actually buying properties, you have to have a decent amount of money, or you have to raise somebody else's money, and it still needs to be a decent amount to get going with it. But yes, there's a high startup cost. But the fact of the matter is, you are now holding an asset that will actually pay you as time goes on. Real estate is one of the few assets where you don't have to sell to continue getting income. And you can pull money out of it and essentially sell some of it while not actually selling it. When you do cash out refinances or when you do home equity lines of credit, those kind of things. Your real estate gives you many different ways to get income while still holding the asset. Show me how you can do that in the stock market. What? You can do dividends and you get the dividends from that. But that's kind of a set thing there. It's not going to be a massive influx. You can't pull more out than just the dividends without selling the stock like you can with your properties. Also, every year you're raising your rent and getting more income every month because of it. Your dividends are going to be set at a certain percentage for the most part, and it's up to the whims of the stock market and the board of directors about how much of each dividend you're getting. They can cut the dividends if they want. They could raise them if they want, but you're left to their discretion. When it comes to your property, your rent, you are taking charge, and it doesn't have to be that hard to do. People also at some point realize you can't work until you die. Well, I guess you could, but most people don't want to work until you die. So you need to start planning, when am I going to stop and how am I going to stop? And that is a conversation you have to have amongst yourself or yourself and your significant other. But just know, if your plan is simply, I'm going to do the 4% thing where you take out 4% a year from your portfolio, you haven't been paying a ton of attention to what the stock market actually does, have you? I will admit, historically speaking, the stock market has returned 8 to 10%. But let me tell you a little warning story, and this warning story is actually near and dear to my family. My father-in-law retired from his job at a certain point in time, thinking that he was set. He'd worked hard, he'd saved up, his money was in the market, everything was great. He could finally kick back and relax. Well, guess what year that was? 2006. And guess what happened after that? It crashed. And guess when the previous time he was thinking about retiring was? 2000. And thankfully that time, before he retired, the crash happened. And he wasn't stuck holding 50% worth of stock that he had beforehand. But he'd seen that get hit. And then 2006 came, and he saw it get hit another third right after he'd retired. And guess what? He had to go back to work. The plan of the stock market doesn't always work because the stock market has huge ups and then it goes flat for a while, and then it'll crash for a bit, and then it'll go up a lot. If you miss out on that time where it's booming, if you missed out on the COVID boom with the stock market, you just missed out. Because when it comes to the stock market, that huge ramp up is very, very unlikely to happen again for another 15, 20 years. So there's a very good chance we're going to be on kind of a flat curve or so for a while. Because historically, that's what happens, is the stock market barely moves, it dips, there's a big boom. Barely moves, dip, big boom. Those kind of things. It's not like you're just getting 8%, 8%, 8%, 10%, 7%, 8%, 8%. Historically, yes, it averages out to that, but only if you're in it for the long haul. So you need an asset that can keep you in it for the long haul. And guess what? Holding individual stocks, not that asset. Your rental income, on the other hand, will remain steady. As we've talked about before, average rents, median rents across the country have only decreased 2 out of the last 81 years. I will bank on that way more than I will bank on the stock market going up. If you tell me, Adam, I'll bet you $1 million that the stock market will only go down 2 times in the next 81 years, I would take that bet every day and 18 times on Sunday. But the fact of the matter is, whenever things get hard, your rents actually go up. Your income will go up, and rents, for the most part, historically, nationwide, don't go down. They do go down in some markets, but the markets we're investing in, the smart markets, the markets that are landlord friendly, that have good population demographics, that have a diversity of economic activities and employers, they don't get hit like you're expecting, like you see in the coast markets up in the Northeast and the West Coast. They don't get hit like that. They stay flat or they increase. We rarely hear anything at all about, oh, the rents dipped in this area. It's always holding steady or increasing. Your rental income will be a steady presence in your investment portfolio as time goes on. So why is it worth investing in it? Peace of mind, stable income. Look, people talk about why they stay in the W-2 jobs and why do you stay in it? You need it for the money, right? You're not just working 40 hours a week, 50, 60 hours a week because you absolutely love it and there's nowhere else you'd rather be. You're doing it because you need it, your family needs it. You know, everybody is relying on you to bring in the income. So if you can do it with rental properties, why not, right? So as you're planning this, you have to decide, are you going to try to build up your stock portfolio to the point where you're going to be able to live off the dividends and hope that they're not cut? Or are you going to start selling your assets and hope you run out of life before you run out of money? Or do you want to set something up where you can continue to grow it over time, where your income will continue to grow over time, where you can hand it off to family members over time and leave generational wealth for your family? You can't work forever. All right, we discussed that. You can't work forever. Eventually, you are going to need care. You're going to need somebody around you to help your situation. And real estate is worth it to me because when that time comes, my properties are going to take care of me. My kids will have to manage properties, not me. I'm not going to be financially draining them. They can handle the income that comes in from the properties and use that to do whatever they need to do with my wife or me. So real estate is worth it to me because it sets me up for the life I want to lead. It puts me in the place that I want to be. And I don't have to worry about whatever the politicians decide to do, crushing the economy. So that is why, for me, it's worth it. And I think if you give it a chance, it can be worth it for you too. I hope this video has been helpful. I know it's a little bit different from the ones I usually put out, but I hope it's been helpful. If it has, please click the like button. Let us know that you appreciate it. If you have any questions or comments, leave it in the comments below and I will get to it as soon as possible. Check us out at renttoretirement.com. You can see all the properties we have available there. You can also set up a time to talk with an investment strategist to plan out how you're going to be successful in your real estate journey. Really appreciate you taking the time to watch the video. Don't forget to subscribe to the channel and click the notifications bell. We'll see you on the next video.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.